Hi, bootcamp enrollees. I am here with a short webinar on business credit. Now, this is not going to be a step-by-step to building business credit because that's what we're going to do in the bootcamp. But there's some essential information about business credit reports and scores that I want to make sure you understand. So this will hopefully minimize your headaches and optimize your success as you go through the bootcamp program. First, let's just go over real quick who uses business credit, because I know many of you are interested in business credit to try to get financing that gets you away from personal guarantees. That's great. We're definitely going to cover that, but I also want to talk a little bit about some use scenarios that you may not be familiar with. SBA loans, which are some of the best types of business financing, they use a score that incorporates business and personal credit. We'll talk about that in a minute. Business insurance. So we had a NAV customer who owns an insurance agency. He was trying to get errors and omissions insurance for his agency, and he was getting turned down. And with some investigation, he discovered that his business credit was being mixed up with another business, similar name in another state, and they had negative credit, and that was on his credit report. And so it was making it more difficult for him to get insurance. So that's another situation. Government contracts. If you're going to try to do business with the government, you're going to need a DUNS number. Good chance they're going to check a PAYDEX score as well. And then business deals. So if you want to do business with the Targets, the Walmarts of the world, large companies, they will almost certainly check business credit. And some smaller savvy companies will do it as well. I did a webinar once for accountants where afterwards one of the accountants emailed me and she said, I used to work in the supplier department at Walmart. And we pulled DMB on all our suppliers, and most of the time they had no idea. Like, they just weren't familiar with it. So setting up business credit can have a lot of good implications for your business, which we'll talk about. A fun fact before I talk a bit about the business credit bureaus: which credit bureau employed 4 former U.S. presidents? Anyone want to guess? You can just guess, I guess, in your mind, since we don't have a live poll going here. It actually was Dun & Bradstreet, DNB. It's one of the oldest credit bureaus in the country. Abraham Lincoln was a reporter for them at one time, and then it was Grant, McKinley, and Cleveland also were reporters. They were in charge of, well, they were employees who would gather information and report it to Dun & Bradstreet, so then it could be reported out when someone was thinking about extending credit. Now, there's some major differences between personal and business credit, and if you're not set up or if you don't have a heads up on this, you're probably going to be surprised and frustrated. So I'm going to clear this up for you right now. First of all, there's no federal law that covers business credit. So in personal credit, we have the Fair Credit Reporting Act, and that gives you a free annual copy of your credit report. It gives you a notice if your credit report was used. It limits who can check your business credit. It gives you all kinds of rights, the right to dispute information and get a response usually within 30 days, etc. None of that applies to business credit, no federal law. There are differences in bureau scores and reports, which I'll go over in a minute. Business credit reports are more likely to have errors. So there was a Wall Street Journal report that found that business credit reports had about a 25% error rate. My theory on this is the reason there's more mistakes on business credit than personal credit is because business owners aren't checking them. And ultimately, you and I are the only ones who can look at a credit report, whether it's personal or business, and say, oh, I forgot about that account, I was late, or, hey, that's not mine, I need to dispute it. So really, we're the ultimate arbiter of whether our business credit report is correct or not. And then payments count differently, which we'll talk about in the boot camp in more detail. So first, the first thing you're going to notice if you get your business credit report and you do have accounts reporting is they do not list the name of the creditor. So with your personal credit report, you get it, and it'll say you have a credit card with Citibank or Bank of America, or you have a mortgage with Wells Fargo or Navy Federal Credit Union. None of that appears on business credit reports, and that's just pretty much an industry standard. Instead, they group them by type of account. So in this example, one has a utility account, a communications account, probably a cell phone, food distribution, maybe a Cisco type account, materials handling. So they group them. So what I want you to understand is as you start this process, you keep track of who you're applying to, and then when you see these things show up, make a note to yourself so you know which one is which, because once you get 7 or 8 accounts, it can get confusing, right? So if you're sort of on top of this at the beginning, you're paying attention to where you're applying and where you're getting credit and then what's showing up on your credit report, that's going to make things a lot easier for you. Business credit reports do not list credit limits. So you will not see a credit limit. And when a credit report, business credit report, calculates your debt usage, also known as utilization, that compares your credit limit to your outstanding balance or reported balance, that they don't have a credit limit, so instead they'll have to substitute the highest recent balance. So they'll take a recent balance, compare that to what the current balance is, and use that to calculate how much debt you're using out of your available accounts. So it's a little bit different calculation. Not all the credit bureaus care about debt usage, but some do. So just want to keep that on your radar if that comes up. Payment history is very different. It's much more granular with business credit. So if you pay a credit card a few days late, probably won't show up on your personal credit until you're 30 days late. Business credit, yes, it can show up. We are going to have a whole session just on payments and payment history and setting up your systems. But I do want to just flag that from the beginning, that paying on time is really, really important with business credit. And then, of course, there's no free credit reports required with business credit. That's one of the reasons why NAB exists, is because our co-founders, Levi King and Kaiten Hansen, saw a need to show business owners that information so they could be informed, build strong credit, and fix mistakes. So that's what we're trying to do at NAB. So who are these commercial credit agencies? Well, the main ones are Dun & Bradstreet, Equifax, and Experian. Now, I want to emphasize with Equifax and Experian, they also have personal credit data, but those are completely separate divisions. Like, they're completely separate databases. They don't share the information. They can, in some cases, produce a blended score that might take information from the two separate databases. But I've heard some misconceptions from people when they sign up for NAB and they see their personal and business credit, they suddenly think that we're somehow blending those two, and that's not true. That's not the case. They're actually separate databases, and they don't share because personal credit's so regulated. They don't share that information with business credit agencies. So just keep that in mind. Now, SBFE, this is not a credit bureau, but I want you to understand it because it's possible it could impact some of the things we're going to talk about in the boot camp. Small Business Financial Exchange is a co-op. It's like a data warehouse. And so what happened is a bunch of the big lenders got together, major names you'd recognize, all the major banks that do commercial lending, and they said, hey, we're going to share information in this database, and then we're going to allow members to use the information in the database, but only for credit and lending purposes, not for marketing purposes. I think there was some concern there that some of the information they might be sharing might be getting out there for marketing and competitors might be using, etc. So this is a data warehouse used purely for lending decisions. Now so you would never get a credit report from SBFE, and the lender would never get a credit report from SBFE. Instead, what SBFE does is it has certified vendors. So it used to be just Equifax. Now they have Experian, Equifax, Dun & Bradstreet, and LexisNexis are all certified vendors. So they have access to the SBFE data, and when they sell a credit report, they can sell it to someone who wants SBFE data in that credit report as long as it's used only for lending purposes. So it's not likely to show up on your radar, but if you, for example, get a credit card, they probably have the small business credit card, of course. They have that information in this database, and it could end up on a report that a lender gets, but it may not necessarily be on a report that you see because it's only data that's available to someone who's purchasing an SBFE sourced report, data source report through a certified vendor with that information. It's a little bit confusing, but I do want it to be on your radar. There are some other business credit bureaus, PayNet. They've been well known for leasing information. Infogroup is interesting because they power search engine results. So if someone searches for your business and you haven't already set it up in Google My Business, it could be that information came from Infogroup. So they actually call business owners and they go door to door in certain areas and collect information about businesses, but they also have some reports that they sell. And LexisNexis, which is well known in the insurance industry, they also have some commercial credit reports, and as I just mentioned, they are a partner of the SBFE, a certified vendor of the SBFE, so they do have access to that data for reports that they sell. And finally, when it comes to business credit, there are a variety of other sources that could be used to help judge your business. So it could be cash flow data. So you're going to see when we talk about lenders, that there are lenders that want to hook up to your bank account or to your QuickBooks or FreshBooks account, Xero account. and they want to use that information to help them make decisions about what to lend to you. They could look for information about your invoices and receivables, social media data. Experian has a new score that pulls in commercial, so business social media data in to provide this score. So they don't do it for personal, but they do it for business. So things like your TripAdvisor or Yelp reviews for your business, your Facebook business page, Twitter account. There was a lender who spoke at a major conference who said we can make great decisions based on someone's shipping data. You know, how many boxes are they shipping, to what zip codes, what are the sizes of boxes, how frequently, etc. So there's a lot of other data that, because it isn't as regulated, can be used for business credit. In addition, you know, a lot of lenders are trying to find ways to reach small business owners who may not have established business credit. They want to be able to lend to them, but they don't have the data because that business owner doesn't understand business credit, it hasn't been proactive, and so they're looking for other sources. So for you, as the small business owner, what I want to say is your business reputation is very important. So find a way to respond to reviews online, especially negative reviews. Make sure that you're monitoring this stuff on a regular basis, even if you have to outsource it, because that type of information could have an impact not only on your business's reputation, but eventually on your business's ability to borrow money. How are business credit reports started? So this process is a little bit different than personal credit. With personal credit, you get an account and they report, and that starts your personal credit report. With business credit, the bureaus will try to monitor when they can, in states where they can, they'll monitor filings with the state. So things like you incorporate in a state, you file a fictitious name, a doing business as name, you get a business license. They try whenever possible to link to that information, and then when they get that, they can start a file that way. So you may have a file even though you haven't done anything proactively with your business credit. So that's why your starting point with your NAV account is to try to find your business with all the major credit bureaus. It could start with a credit account. So if for example, you try to find your report with Equifax and it doesn't come up with any matches, they may not have been able to get that information elsewhere. And so when you get that first account that reports to Equifax, that could start your business credit file. With Dun & Bradstreet, you do need to get a DUNS number if you don't have one. And that's in your business launcher tool. The DUNS number is your identifying number. That's like your social security number in the Dun & Bradstreet commercial database. Experian uses their own number called a business identification number, and then Equifax uses something called an Equifax ID. And I recently had a back and forth with a business owner who just was really confused because he thought that everything business credit would be linked to his employer identification number, his EIN, or your business might have a TIN, a taxpayer identification number, probably an EIN. And he thought that number was the link to building business credit. In fact, it's really not. You may be asked for it on a credit application, but keep in mind that the credit bureaus are going to have their own identifier that they're going to assign to your business, and that will follow your business through for the data that goes into your business credit report. What's in a business credit report? It's pretty similar to personal credit in that there will be, some basic identifying information about your business, location, number of employees if that's available. There might be financial information. You see, there's basic information that if it is available, they will report it on the business credit report. And then they'll summarize your payment history, and then they'll have any public record information. So if you've had a judgment, tax lien, or a bankruptcy or something negative with your business that's in the public record, which means public record means filed with the court system, then that will be on there as well. What you don't find emphasized much on business credit is inquiries. So inquiries may or may not be listed, and if they are, they usually don't have much impact on the score. So I wouldn't get too stressed about business credit inquiries because they don't carry the same weight as they do with personal credit. Right. What do you think is a good business credit score? Now, you're NAV customers, so you might have seen your credit scores. And when I usually ask this in a workshop with business owners, usually I get answers like 750 or 680 or 820. They're thinking in terms of personal credit scores. With business credit score, the ranges are different. So, for example, with Experian, their IntelliScore, the range is 0 to 100. 100 is the best score. It's the lowest risk. And if you have an 80 to 100, you have excellent business credit with them. DNB, similarly, with the PAYDEX score, 0 to 100. 80 to 100 is excellent. The FICO SBSS score, which I'll touch on, goes from 0 to 300, with 300 being the best score. Now, D&B has other scores. They have a higher score range. So what I want you to do anytime you're checking your business credit, whatever source, through your NAV account, make sure you are looking at the range. You want to see what the range is for that score and see where you fall on the range. We'll make it pretty easy at NAV. We're going to give you red and yellow or green. So you know if it's really strong, it's going to be green. If there's could use some work, yellow. And if it has some issues, you're going to see red. We try to break it down to you that way, but always make sure you're looking at the range so that you understand where you fall in that range. Now, I touched upon the FICO SBSS score. This is a score created by FICO specifically for small business. It was adopted several years ago by the Small Business Administration, the SBA, which guarantees some small business loans. So SBA doesn't make loans, but it guarantees SBA loans, and those can be excellent low-cost loans for your business. So with the FICO SBSS score, this is a score that can take into account the business owner's personal credit as well as the business credit of the business and blend the two into a single score. Now, this doesn't mean that they're blending your credit files. Remember, I said those are kept differently. What they're doing is gathering the data from both sources and using that to create a score. FICO doesn't have any credit data itself. All it does is supply the formula, right? They're the formula makers, but they do not have the data themselves. And so they're combining that. And with the FICO SBSS score, you ideally want to have a 160 or above out of 300, and that's enough to get you an SBA, to get you through the first hurdle of an SBA loan. Not to get you an SBA loan, but to get you through the first pre-screen if you have a 160 or above. And what we found at NAV is we do have customers who have excellent personal credit, no business credit. They can get a high enough SBSS score. But it's a lot easier if you have strong business and personal credit to get that qualifying score. So we're going to work on building business credit in this boot camp so that you can hopefully score well on that score as well as others. Now here I want to point out that it's not unusual to see differences in the business credit scores of the different bureaus. So you see a really low one here, a moderate one, and an excellent one. This could depend on the data sources. Not all the companies that you're going to apply to are going to report to all three. In fact, it's most likely they aren't going to report to all three. Some business credit cards do, but for the most part, you're going to find that you're going to have to be proactive with each of them because they do collect different information. In addition, they don't always have all the same information. I checked the business credit on a business I knew had filed for bankruptcy, and I found the bankruptcy was listed, I think, 3 or 4 times on Experian, and it wasn't listed at all on the D&B report. So it depends on the data sources that they're using, too, what they have. So you want to make sure that you're tracking all of your major business credit reports in order to set your business up for success. All right, so I'm not going to go through all the steps of building business credit right now because that's partly what the boot camp is about, but I do want to touch on a few issues and highlights that I think hopefully will be helpful to you, and we'll wrap up pretty soon here. It's going to be a pretty short webinar. So first of all, I do recommend that you have a legal business entity. Some of you are sole proprietorships. That's okay, and sometimes that's just the way you have to start your business because you can't afford to even incorporate. But I would really consider as soon as you can to form a legal entity. And the reason is, if you think about it, until you have that legal entity, you and your business are one. So any kind of credit that you get is really both of you. It's not really separate. So you can't truly get away from personal credit without a legal entity. And there are some other benefits as I've listed on the slide. So just really think about that and look into it. There are some very affordable options that will help you to do that. You can look in the NAV marketplace for some links and referrals there if you like. If you don't have a DUNS number already, I mentioned that before, make sure you get one. It can take up to 4 to 6 weeks. I think typical turnaround time is about 30 days. You can do that in your business launcher in your NAV account, and that will let you apply directly for a DUNS number and get started with that. All right, the 3 business credit challenges that we see most often with our customers: lack of credit data, negative information, and wrong information. So let's start a look at that real quick. Lack of data is very common, so there isn't enough data to produce a credit score. And that's what this challenge is all about. We're going to help you establish accounts that report so you have business credit accounts that are reporting. Credit score needs information in order to create a score. It can't guess out of thin air. It wants to see how you've handled bills in the past in order to predict how you've will handle bills in the future and handle payments in the future. So adding accounts is one of the crucial steps to building business credit. You might see some collection accounts on some credit reports. Those, that's just like personal credit. A debt collector for your business could put it on your business credit, and that could be negative information. And you want to be aware of it. So you want to make sure that you're checking on a regular basis to see if there's anything like that on there. UCC filings, these are pretty common and many business owners aren't aware of them. This is where a company lends you money and they place a notice, a notice of the Uniform Commercial Code with the court saying, hey, we have dibs on this business's property. So it could happen, let's say you lease equipment, they could put a UCC filing on the equipment so that if you didn't pay, they can take the equipment back. Or it could be all receivables. So you could get a line of credit through an online company, and they could just place what's called a blanket UCC against all receivables. So that means any money that's coming in, they have first dibs if you default. So UCC filings aren't always negative, but what we've experienced at NAB is that these will get filed and they don't always get released. So the business owner has satisfied the debt, they paid it back, but the UCC, the company that placed the filing, never released it. And they have to file a notice of release with the state where they placed, with the court where they placed the filing. So you may need to get proactive about that. If that's happened, contact the creditor and have them release it. And be aware that some lenders have a minimum threshold. So if they see, for example, more than one UCC filing, it may be an automatic reason for not approving an application. So you want to try to keep those to a minimum as much as possible. Not always avoidable, but sometimes you do want to try to keep on top of that. Bankruptcy. So if your business has a bankruptcy, a commercial bankruptcy, it will be reported on your business credit report. And I've seen credit reports with multiple bankruptcies, as you see in this example. Tax liens or judgments. Tax liens or judgments are no longer reported on consumer credit for the most part, but they do show up on business credit. So if your business has a tax lien or a judgment against it, so that means you didn't pay your taxes, the state or federal government filed a tax lien or municipality, or you went to court, you lost, they got a judgment against you. Again, this is commercial data. It can show up on your business's credit report. So how long does that negative information report? Well, in personal credit, it's pretty standardized because of the Federal Fair Credit Reporting Act, which I described. And we'll talk about this more in the personal credit webinar. But on business credit, there's no law that says they can only keep it on for a certain amount of time. So they each have their own policies. And we actually have an article on this. I will post it in the comments with this webinar so you can see the details if you have anything going on. But here's just some examples, 6 years, 9 months to up to 11 plus years for liens at DMV, Equifax, depends on the type of information. Equifax, for example, doesn't report collection accounts as a separate item, but if the creditor, if you have an account with someone and it went into collections and they reported that it's in collections, that would show up as in collections on that account listing, and that could stay on there for up to 5 years. Your time in business is also very important for your business credit. So there's two ways this can be looked at in business credit. One is time in file, which means your first account was opened on this date. So that's sort of like age of credit on your personal credit. So it's a reason why you want to establish business credit sooner rather than later, because the one thing they may look at is time in file. The other is time in business, and that's based on the start date of your business. And you might have noticed in the 14-step checklist that we talked about starting a date for your business. And this sounds a little counterintuitive, like wouldn't you know when your business started? If you incorporated, yes, you have a date that this is the date you incorporated. But if you start as a sole proprietor, you may not really have a specific date. You started putting up a website, you started making some sales on Etsy, whatever you did, and you may not have a specific date. So I encourage you to figure out a date and stick with it. Every time you apply for credit, use that date consistently. Because what creditors don't like to see is inconsistency. They don't like to see that on your application you have one date and then on the credit report it has another date, and it makes them wonder what's correct, what's truthful, what's accurate here. So make sure that you determine your business start date and stick with it. If you're starting as a sole proprietor, you start that date and then you later incorporate. Hopefully you keep a similar name. If not, can be possible to link the two businesses if you have business credit for your sole proprietorship. But you want to hopefully use that date to continue your business credit rather than having to start all over again. But sometimes starting all over again is necessary. Here, I just want to touch upon something I call, instead of other people's money, which you've probably seen, leveraging other people's money to get financing and grow your business. We're talking about other people's credit problems. Other people's credit problems can definitely spill over into your business. So an example, our co-founder, Levi King, I told you he had 5 different businesses in different industries before he started NAV. And one time he went to apply for commercial credit, and a bunch of stuff showed up on his business credit that he didn't know. And it showed a bunch of debt, and it linked him to a family member who wasn't a partner in the business. And the commercial credit lender thought that he was trying to hide a business partner, and they don't like that. So hiding a business partner is a big no-no. So they thought he was basically trying to pull something over on him, and that he was declined. And it took him quite a bit to straighten that out and get the funding that he needed. So you just want to make sure that your business isn't getting mixed up with another business with a similar name. And that's another reason to always check names before you start your business. Check business filing registrations in your state, check trademarks. You don't want to end up with a name that's too similar that ends up mixing up your credit. It's impossible in most cases to find a truly, truly unique name, but at least find one that hopefully is different enough that you won't end up like with the same name as another business in the same state or even a same geographic area. I've seen that where I tried to pull a business credit report, and it's 2 restaurants. How many restaurants we know named China King, for example, right? There's a lot of restaurants with that name, and I've seen them in a similar geographic area, and even if they aren't connected, they could get mixed up. So just be careful of that. Industry classification. This is what we're going to talk about in your next unit, which is the code that's assigned to your business to indicate what type of business you're in. And this is important for a variety of reasons. As I mentioned, some lenders will only lend into certain businesses or will exclude certain types of businesses. They won't lend into those types of businesses. Great example right now is, of course, cannabis companies that can't get loans for a variety of reasons. But there are other types of businesses that may have trouble. In addition, business credit scores can compare your business to other businesses in your industry, other businesses in your industry and your geographic area. So they can slice and dice this information for a lender in a way that could be directly related to the code that is used. So we'll talk about that in the next section. And this is actually a great starting point for that. So I hope this overview was helpful. If you have any questions about specifically what I discussed in this webinar, put them in the comments below. I will do my best to answer them as quickly as possible or find you an answer if I don't know it off the top of my head. All right, thanks for joining me. And again, I'm looking forward to continuing our boot camp.